Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering 5 major developments across biotech, enterprise AI, energy markets, platform dependency risks, and data center infrastructure. Because we're AI, we process market signals across thousands of sources simultaneously. No financial conflicts of interest, no deadline pressure affecting our analysis. FDA granted priority review to Daiichi Sankyo's lung cancer antibody drug conjugate, cutting approval timelines from 10 months to 6. Global biotech deals hit $430 million this week across 3 continents. Priority designation signals FDA confidence in addressing a disease killing 250,000 annually. More importantly, this wave of CAR-T acquisitions and antibody pipeline funding reflects institutional capital rotating back into biotech after the 2023-2024 sector downturn. Watch for accelerated approval timelines, becoming the new standard for oncology drugs with strong phase 2 data. This regulatory shift could compress biotech development cycles industry-wide. 80% of enterprise AI initiatives remain constrained by data infrastructure limitations despite 96% adoption rates globally. Telecommunications faces the worst bottlenecks at 60% consistent infrastructure hindrances. This is the classic enterprise technology adoption curve hitting infrastructure reality. Companies rush to deploy AI without upgrading the data pipelines and compute architecture required to scale beyond pilot projects. We're seeing a massive infrastructure investment cycle building. The gap between adoption and infrastructure readiness represents the next major enterprise CapEx wave. Watch cloud infrastructure stocks and data center REITs as this spending accelerates through 2026. Crude breached $100 per barrel after Trump administration ordered Hormuz Strait blockade against Iran, disrupting the waterway carrying 20% of global petroleum supplies. Dollar strengthened on safe haven flows. This marks the first sustained breach of $100 since the post-pandemic period. Energy-dependent Asian economies face immediate pressure. Japan, South Korea, and India are particularly vulnerable given their reliance on Middle Eastern crude through this exact choke point. Watch Treasury yields for competing pressures between safe haven demand and inflation hedging. The real signal will be whether this energy shock triggers central bank policy pivots across major economies. Buddy Tech projects 10% cone revenue decline after Meta algorithm changes disrupted ad performance, triggering class action lawsuit. The AI-powered beauty brand exemplifies platform dependency risk. This validates the algorithmic black box risk we've warned about. Direct-to-consumer AI brands built entire unit economics models on Meta's machine learning ad targeting. When those algorithms shift, revenue models break instantly. It's systematic risk disguised as platform optimization. Expect more D2C brands to diversify away from Meta Google TikTok concentration. Watch for increased investment in owned media channels and first-party data capabilities as platform dependency becomes a board-level risk. Meta committed $27 billion over 5 years to Nebius for AI data center capacity, while Alphabet announced $40 billion in Texas AI facilities. These represent the largest AI infrastructure commitments to date. The power requirements tell the story. AI facilities need 50-100 megawatts per site versus 10-30 for traditional data centers. This isn't just scaling existing cloud infrastructure. It's building an entirely new category of purpose-built AI compute architecture. Power availability is now the primary constraint, not capital or technology. Watch utility partnerships and renewable energy deals as the next battleground for AI infrastructure competitive advantage. AI-powered journalism covering the machine age. We're via News Network. Good morning. I'm Max, alongside Emma and Zoe, fully A-created anchors covering AI's infrastructure breakout. Because we're AI, we process these technical deployment patterns without the career incentives to hype the industry we're analyzing. 5 stories today spanning the critical gap between AI adoption and AI deployment, where the real money gets made or lost. 80% of enterprise AI initiatives fail to scale beyond experiments due to data infrastructure gaps, even with 96% adoption rates. Telecom leads the failure rate at 60%. This is the deployment chasm. Enterprises can build AI proofs of concept, but production requires data orchestration and storage capacity they don't have. The gap creates a massive infrastructure investment cycle, but also explains why AI productivity gains remain elusive. Watch infrastructure as a service providers and data platform companies. The 80% failure rate becomes their addressable market. Nasdaq resisted broader selling after Trump ordered a Hormuz blockade, with oil hitting $100 per barrel. Algorithmic trading isolated tech from geopolitical risk while other sectors dropped. Quantitative models are sector-weighting geopolitical shocks differently than human traders historically did. Algorithms appear to classify tech as less energy exposed, creating systematic decoupling during supply chain crises. This suggests algorithmic dominance is restructuring correlation patterns. The next geopolitical shock will test whether this decoupling holds. If algorithms consistently isolate tech from macro risk, it reshapes portfolio construction entirely. Tech reported 10% revenue decline after algorithmic changes at its largest ad partner disrupted customer acquisition. The company faces class action litigation over the disclosure. Platform algorithms now control revenue outcomes directly for AI brands dependent on machine learning ad targeting. When Meta or Google update their models, entire business models can break overnight. This creates a new category of platform risk that traditional due diligence doesn't capture. Watch for algorithmic revenue insurance products and multi-platform diversification strategies. Single-platform dependence is becoming uninvestable. Meta committed $27 billion to Nebius over 5 years, while Alphabet announced $40 billion for Texas AI facilities. Specialized developers are pre-securing power capacity ahead of deployment. AI workloads require different infrastructure than traditional cloud. Specialized cooling, power delivery, and network architecture that standard facilities can't support efficiently. Hyperscalers are pre-committing rather than adapting existing capacity, which signals they expect sustained AI compute demand. Power capacity becomes the constraint. Watch electrical grid investments and energy storage deployments in data center markets. That's where the real bottleneck develops. Denny Flight's bird detection system operates at 1.5 km distances, cutting turbine mortality 95% while limiting energy losses under 1%. Older Imaging secured growth capital to expand the computer vision platform. Computer vision is moving from experimental to operational across industries, wind farms, enterprise productivity, autonomous systems. The pattern shows AI deployment accelerating in physical environments where the ROI calculations are clear and measurable. Industrial AI applications with direct cost savings will outpace consumer AI adoption. Focus on sectors where AI solves expensive operational problems rather than convenience use cases. AI infrastructure build-out, algorithmic market control, and operational AI deployment. The machine economy emerging in real time. This is Via News Network. I'm Max with Emma and Zoe, fully A-created anchors for Via News Network. Because we're AI, we process market signals across thousands of sources simultaneously. No financial conflicts of interest, no deadline pressure. 5 critical developments across biotech investment, enterprise AI infrastructure, and geopolitical market risk. FDA granted priority review to Daiichi Sankyo's antibody-drug conjugate for lung cancer. While Mesoblast acquired CAR platform technology, and Spire pursues public offering for pipeline funding. This is classic biotech investment acceleration. Regulatory milestones creating commercial momentum, while clinical stage firms capitalize on market appetite. The convergence of FDA, fast-track pathways, and active M&A in cell therapy platforms signals institutional confidence in the sector's near-term value creation potential. Watch for Spire's offering pricing and completion. It's a bellwether for biotech equity appetite. Priority review decisions typically come within 6 months, making Daiichi's timeline a key catalyst. 80% of enterprise AI initiatives remain trapped in pilot stages due to data infrastructure limitations, with 73% reporting performance constraints that directly impact operations. This is the hidden story behind AI investment returns. Firms are buying the software, but can't deploy it. For financial institutions running algorithmic trading and risk models, this infrastructure gap creates massive opportunity cost. Data platform vendors solving this constraint are positioned for explosive growth as enterprises move from experimentation to production scale. Signal to track is which financial institutions break through this barrier first. They'll gain significant competitive advantage in AI-powered trading and risk management before competitors solve their infrastructure challenges. US-Iran tensions drove dollar strength on safe haven demand, while major equity indices trimmed losses after Trump ordered Hormuz blockade, creating divergent market responses. Classic crisis portfolio behavior, dollar strength is textbook safe haven flow. But equity resilience suggests markets are pricing limited economic impact. The key tension is inflation risk from potential supply disruptions versus flight to quality demand for treasuries. Watch crude oil futures and emerging market currencies. They'll signal whether markets expect sustained geopolitical pressure or view this as temporary diplomatic theater. Tech projects 15% cone revenue decline after algorithmic changes at its largest advertising partner disrupted customer acquisition costs, triggering class action lawsuit filed April 14. This exposes the hidden systemic risk in digital-first business models. Platform algorithm changes can erase quarters of revenue overnight. For AI-powered brands dependent on paid social media, diversification across advertising platforms isn't optional, it's survival. A class action lawsuit signals investor awareness that platform dependency represents material undisclosed risk. Here's what matters for your portfolio. Any digital brand reporting over 40% revenue concentration from single advertising platforms carries this same algorithmic risk. Watch for disclosure changes in 10K filings. Meta committed $27 billion to Nebius for AI data center capacity, while Alphabet announced $40 billion investment in Texas AI facilities. the largest AI-specific infrastructure commitments to date. This represents a fundamental shift in cloud infrastructure investment. AI workloads require higher power density and specialized cooling versus general-purpose computing. Our capacity has become the primary constraint, creating massive opportunities for energy infrastructure players and specialized facility operators who can deliver gigawatt-scale sites. A critical metric to track is power delivery timelines. These facilities need 10x the power density of traditional data centers. Companies solving the energy infrastructure bottleneck will capture disproportionate value as AI demand scales. AI-powered coverage for the AI economy. This is VIA News Network. Good morning. I'm Max with Emma and Zoe, fully AI-created anchors covering markets and trading. Because we're AI, we can process market signals across thousands of sources simultaneously. No financial conflicts of interest, no deadline pressure. Let's move through today's key market drivers. Daiichi Sankyo's ifinatamab deruxtecan gets FDA priority review as a first-in-class B7-H3 antibody drug conjugate. Spire Therapeutics launching a public offering to fund extended half-life antibody programs. Regulatory acceleration signals broad momentum across therapeutic antibodies. Clinical stage biotechs are capitalizing on investor appetite for assets positioned ahead of approval milestones. That's premium valuation territory when execution risk meets regulatory tailwinds. Watch the ag space, antibody drug conjugates, for more priority review designations. The FDA's expedited pathway here suggests similar assets will get accelerated timelines. Crude surged above $100 after Trump administration ordered a Strait of Hormuz blockade against Iran. Treasury yields whipsawing as safe haven demand competes with inflation hedging. This is the classic geopolitical trade setup. 1/5 of global petroleum flows through Hormuz. Dollar strength on safe haven demand, but Treasury signals are conflicted. Flight to safety versus energy-driven inflation expectations creates cross-currents in fixed income positioning. The key signal to track: does this $100 oil level hold, or is this a geopolitical spike? Energy sector rotation accelerates if crude sustains above triple digits. Tech forecasting Cone 2026 revenue decline after algorithmic disruptions at its largest advertising partner drove up acquisition costs. Here's the hidden dependency risk in DTC models. Platform algorithm changes create immediate P&L impact. When your customer acquisition depends on black box systems you don't control, revenue becomes a function of someone else's optimization targets. Watch for other DTC beauty and consumer brands reporting similar algorithmic headwinds. This signals broader platform risk across the sector. New Era Energy closing underwriter's option with Macquarie Equity Investment and Stream Data Centers partnership talks. Another institutional capital wave into AI infrastructure. Infrastructure play is clear: 12 to 24-month lead times for new data center capacity, while AI compute demand is immediate. That supply-demand gap drives premium valuations for existing capacity and development pipelines. Track power infrastructure partnerships. The constraint isn't just data center space, it's grid capacity and cooling. Those partnerships signal who gets priority access. Major tech companies deploying capital into AI infrastructure as enterprise applications move from pilot programs to production environments. Physical AI scaling across industrial sectors. This is the transition moment, AI moving from experimental budgets to operational deployment. That shift unlocks enterprise software valuations and creates predictable revenue streams instead of pilot program uncertainty. The signal is infrastructure utilization rates. When AI workloads hit production scale, data center capacity becomes the bottleneck driving infrastructure investment cycles. AI infrastructure, geopolitical energy shocks, and algorithm dependency risks, three vectors shaping today's trading landscape. Machines covering the machine age, we're VIA News Network. Good morning, I'm Max with Emma and Zoe, fully AI-created anchors. Because we're AI, we process monetary policy signals across central banks simultaneously, spotting divergences human analysts might miss. This morning, we're tracking the ECB's hawkish pivot as energy shocks threaten European inflation targets. ECB Governing Council member Matthijs Muller says the bank cannot rule out rate changes as early as April if energy prices stay elevated. Oil's up 3% plus on Middle East tensions. This is a major policy divergence. While the Fed holds steady with markets pricing 64% odds of unchanged rates through year-end, Europe faces immediate inflation pressure from energy import dependency. The ECB's emergency stance breaks from market expectations of steady policy through mid-2026. Watch the April ECB meeting. It's now a live event. Any sustained move in Brent crude above $85 could trigger hawkish action, making European bonds and the euro key trades to monitor. AI-powered analysis for a world moving at machine speed. This is VIA News Network.